So I was just recording this whole video and my mic was off, so I was literally talking to nothing, which is extremely annoying. This tends to happen to me a lot, but it's alright. I'm gonna put in a clip of the first trade that we took just so you guys can see, and then how we got it back. So clip, here we go. Okay, liquidity was swept, boys. Liquidity was swept. Come on, baby. Don't reject, don't reject. Okay, we're in, boys. We're in. I would love 830, bro. 830 would be so nice up here. You just need to hit stops to break even, really. That's my goal here. My goal is always to hit my stops to break even point, be risk free, and figure out what to do after. Don't do that. I hate when price pushes and it just rejects, bro. Rejections. Massive rejection. Hello, how you doing? Let's fucking go. Good call. Bro, we're still in the straight. Not a good call yet. It's looking nice, though. It's looking nice. It's incredible, bro. What type of candlestick pattern is this, Danny?
It's
Triple tweezer tops. Oh, that's it, chat. Naz is a little cocksucker. Alright guys, so that was the first trade that we caught, and that was this trade over here. We took a freaking buy position on NAS 100, but it was a valid buy position on NAS. If you notice, we get that lower high, lower high, lower high, lower high, lower high. Price then starts to break out of this trend line with equal lows, and this could have been a higher low to then maybe start pushing price and switching that trend over. Unfortunately, price decided to come down, really liquidate these lows. So that was a confluence that I was using to put my buy stops up here. I had buy stops set up there. Price decided to close nice and bullish above that trend line and start to trigger us into some buys. Now, one thing that I did ignore, which I probably wouldn't ignore in the future, is this area over here, right? We have that zone that if we stretch this zone all the way to the left, we can clearly see why we can definitely look to reject at that zone, which we got that beautiful rejection right off that level, which unfortunately that level was literally 6 pips away. So I mean, we can't really be too upset about it, right? We kind of just have to move on from it. But then price decided to, I just had a lot of confluences for this trade. I had a trend line break. I had a pretty strong level here on the hourly time frame, strong level holding, hourly close bullish before the open, and then we started to have this no trade range, very nice, very clean, liquidated the lows, then started to come up and flip bullish. A couple things I could have done differently is probably just wait for this 5-minute candle to close above the highs, and then looking to take my entry candle, because there's two different things. There's a confirmation candle and then there's an entry candle. So this confirmation candle would have been my confirmation of where the trade can potentially go, but the entry candle comes after the confirmation. When we respect these lows and break these highs, I should have been in buys up above here, which also would have lined up with being in buys up above this range here to maybe get a push like this, a push like this, or a push like this. But unfortunately, price does decide to just do whatever it wants on NAS at the open. But as long as I learned from the position and learned what I can do differently for the next time, will definitely help me out in the future. So yeah, I mean, we're traders. Doesn't mean I'm a loser. It just means that I'm a trader. I am going to take some losses along my profitable journey, but it's about understanding those losses, becoming better from those losses, and not holding back because you took a loss. So unfortunately, trendline break didn't quite play out because it was a lower time frame trend line. If I would have looked at the hourly time frame, I could have probably gotten some clues over here that price was bearish once we formed this candle over here, rejected those highs, bearish engulfing candle, coming down back into this range. Then we did start to break out of this trend line coming up here. So overall trend line was getting broken at that point. So I really thought that we were going to hold this level here as a support. But if I also notice on the hourly time frame, we created this high, but then we created this new low. This new low should have told me, hey, market structure is starting to switch to the downside and we should start respecting highs and breaking lows like we did. But I was paying attention to this lower time frame over here because I was looking to catch an orb setup, which is an open range breakout setup, which is pretty much just waiting for a range before open and then looking to buy above or sell below. Unfortunately, price decided to come back up here, tap into that zone, reject that zone, and then just look to push down, right? But if you notice, price was about 7 pips away from hitting our take profit. So things like this do happen. You just kind of have to move on and just really don't dwell on the losses. A thing about trading is that you don't want to ride those highs too high. Like when you're on a win streak, you don't want to tell yourself, oh, I'm on a win streak, I'm the best trader ever, because the markets will then humble you. It tends to happen over over and over and over again. Whenever I ride those highs too high, I tend to dwell on the losses a lot more. Don't dwell on the losses. Don't get excited about the wins. If you noticed in that replay, I wasn't even excited when price did come back up here. I was kind of confident that price would continue up because we were so close to hitting our stops to break even point. But as you can see, like, a member in the chat was telling me, hey, let's go, good call, dollar. I literally told them that this trade is still active. The only time you can say I have a good call in the market is when we're at our stops to break even point or smashing through take profit. I mean, unfortunately, we didn't quite get there, but that's why you don't get excited in the markets, because things like this tend to happen. It tends to put you in a position where you are technically looking like a win. Beautiful trade, right? Beautiful confirmations, beautiful moves, beautiful momentum in your favor, but then price decides just to come back down into the range and stop you out. We lost one R to R on this position. Looking at this trade back though, things I would have done differently is definitely look for buys above that open candle, even if it's just a 5-minute confirmation outside the range. What I would have loved to see was price come back up, right, and come back down, respecting this area here as a level of support. Right now we can maybe look to catch that trade at the break of these highs here to then target our higher highs. But unfortunately, you know, price decided to fake out those buyers, and then we just used that as confirmation for our next trade, which I'm going to show you guys a clip of that next trade right now. That's clean, bro. If I was looking at this trade right here, bro, I would be in this trade. I'm gonna set some fucking buy stops, bro. I don't give a shit. Oh, wait, sell stops. Yeah, I like sell stops, bro. Sell stops, NQ. To retrace, then do the dance for me. We are in. Just give me the move, and that's it, dude. Alright, chat. I might just move my stops to right here, bro, because if we break that high, and then I'll be risking like 25% of my position. So that's what I'm gonna do. Stops right here, bro. Letting it run. There we go. Stops to break even, chat. W's in the chat. We had a stop loss all the way over here, but then I realized it's like, bro, why would we have it all the way up here? If we break that high, most likely we're just gonna come back into this range, and now we should get that push to come down. We're at a 1 to 2 here, chat. 1 to 3 here. All right, guys, I'll be closing full here at a 1 to 4. I was holding that full trade, chat. I'm gonna be closing right now. I just closed, bro, for a 1 to 4 risk to reward ratio. It's insane. 1 to 8, bro. Dude, but look at that, bro. We literally cut the nut. And I didn't put this in the original video, but I thought you guys should know. At the beginning of that clip, you guys saw buys, right? But it was because I inverted the scales. If you click right here to the bottom right and you put invert scale, you'll actually be able to see the chart reverse. So if you're more used to taking buys, or you're more confident in taking buys, and you're trying to take an actual sell position, you just put the chart in reverse, and maybe it'll give you a clearer picture or give you more confidence into taking that sell position. So that's why you guys saw it as buys over here at the beginning of that clip, but it was actually just an inverted scale because it just looked a lot cleaner when I looked at it for buys. So thought you guys should know. Just a little pro tip. Let's get back into the breakdown. So as you guys can see, then we moved on to this trade. But what I also noticed, right, was price decided to come back up and then close bearish on the 15-minute time frame, breaking those lows here again, closing bearish with rejections to the high here. I started to classify this area here as a buyer's fake out because it did fake us out. So we could use that as a confluence for our next trade. We tapped into this zone here. We start to pick up that supply that's sitting right there. Price decided to come back down, start to break the lows, and then we get this beautiful 15-minute candle closure. Also a 30-minute candle closure, which was extremely nice, really breaking into these wick rejections. So what do I say about wick rejections? Whenever you're looking at rejections in the market, there's two ways that you can look at it. If price decides to reject this zone, that means it's telling that zone no, and we should most likely get a push to the upside. But if we get a closure within that wick rejection zone, that is now a candle closure zone, and we should be claiming the new range. So this new range that we are currently sitting in. The 30-minute did close extremely nice below the range, so that's why I decided to take these sell positions. I went back down. Once I had that confirmation on the 15-minute time frame, I went back down to the 3-minute time frame and started to look for a potential trade. This potential trade was right over here. I had original stops were sitting up here at around 40 pips. I started to notice that price did come down and reject that zone, but on the 30-minute time frame, we actually closed below that zone. I'm using the bigger time frames, still understanding that we closed outside of that range on the bigger time frames, so now I can look at the smaller time frames and not lose that overall time frame bias that I had. Right over here, we got that bullish candle closure, which is exactly what I wanted, and then price started to come down. We executed our position at the break of this low here, just due to the fact that we started to get that market structure switch. We had highs over here, highs, 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 highs. We have highs over here. We have triple top over here on the 3-minute time frame. We have our no trade range sitting right there. Now price is starting to create lower highs, lower highs. lower highs, right? Now we had that triple bottom here that got broken out of. So maybe we can then start to look to target our zones down over here, right? Which was our main target, which is why I decided to hold that position all the way down there, is because we had so many confirmations that this lower time frame trend was starting to break out of. So usually when we break out of a lower time frame trend, we should get a higher time frame retracement on the bigger time frames. So price decided to give me a gambler candle setup. What is a gambler candle setup? I get asked this question so many times on what a gambler candle setup actually is and how can I find gambler candle setups. So all you're doing is finding a strong level of support and waiting for a smaller time frame bullish candle. Now what this bullish candle is actually doing, it's trapping buyers to get into the market, because a lot of buyers are using this level as support as a confluence to look to take buys. So it just trapped all the buyers to get into these buys, and then all those buyers have their stop loss below the lows, which is our entry. So that's when we actually took our position. Price came down, price came back up. Now we executed our position right over here, and we actually went straight into profit. We went straight into profit, kind of like we did over here. So I wasn't going to play this game again. I was not going to lose a full position on NAS 100 again. I was going to make sure that I needed to make sure that I was managing my risk before hitting stop loss, so I can keep those losses small and let those winners actually run. So right over here we got that high, so I put stops right above this high over here. But then I noticed price came down and formed this bullish candle, starting to break lower high structures on this smaller time frames. Remember how I look at market structure? Market structure is going to break lower time frame market structure before breaking higher time frame market structure. So I was using that into my favor to maybe move my stops to break even, my stops to this area over here, risking pretty much 25% of my position, probably a little more than 25% if I'm being honest. But overall, looking pretty freaking nice here to put my stop loss over here to risk less on this overall position, but still have the potential to catch the overall push. So then we get another gambler candle setup, where price shows bullish behavior. A lot of buyers got in right there. They put stops below the lows here. We were already in our position with now risking way less than we originally were going to risk. So I already didn't care what was going to happen on this trade, because I already followed my trading plan. I managed my risk. I knew exactly how much I was going to lose if I were to lose this position, and I knew exactly the potential of the risk to reward on this trade was to fill in this whole range over here. So that's what I decided to do. I just decided to execute, move my stops right there. Now price comes up, price comes back down, starts to give me this wick fill. Now remember guys, whenever we have a wick rejection, that does not mean that price is going to go ahead and just push back up, right? We have a chance to come back down if we start to break lows. We knew that price was going to come down, and if we wick fill and break that zone, that's no longer a rejection zone. That's not a zone that we should be worried about, and price just decided to freaking melt, bro. Like once we hit our stops to break even point, which was right over here, once we hit our stops to break even point, I was chilling, bro. I needed to get this loss back as well, so I just held. I was like, look, we have a full range that we can definitely come down and target to. I caught about a 1 to 4 on this position, closed my full position somewhere around over here, which was a freaking banger trade. I mean, I can't be upset with this trade at all. We did get massive confirmation. So I mean, think about this guys, if the markets print this beautiful confirmation candle over here, why would the market come back all the way up, meaning that's going to be a higher time frame wick? Why would we continue to hold that trade? Our stops need to be at break even, risk-free position at that point, and now price decides to just, you know, trickle all the way down. I decided to close down here just due to the fact that we had that zone over here, and I didn't know that we were going to come down, because I really closed it at this level here, because that's where we started to reject on the previous time frames, which is why we closed right there. But then price decided just to form a lower high and then continue running. Like I always tell you guys, don't try to catch the whole move, just try to catch a piece of the cake and you could eat off that. So I definitely ate on this position here. We lost 1 R to RE here, got a 1 to 4 here, up 3 R to R on the day. I cannot be upset at that. And guys, if you guys didn't watch the live streams, bro, I literally gave you guys a full 100-day plan for you guys to become profitable in 100 days. If I were you guys, I would go ahead and watch that video. If I want to take my trading journey serious and treat it as a career, I would definitely go and watch that video right now. Don't give yourself excuses. If you guys have any questions on it, join my live stream tomorrow. We'll catch trades just like this. There is a bit of delay because I do need to upload it in a higher quality, but if you guys do want the same setups, I set sell stops and buy stops anyways. But if you guys do want to talk to me instead of just writing in the chat, join the mentorship. If you guys do want the robot, DM bot. But good luck. Bye.